Hello, this is George Vieth with George Wealth Management in Chattanooga. You may have heard the phrase, beware the Ides of March. Historically, it comes from the story of Julius Caesar, who was warned that something harmful might happen around the middle of March. Of course, that warning became famous when Caesar was assassinated on March 15th. Over time, the phrase has come to symbolize a moment of caution. Interestingly, the phrase has also found its way into market lore. According to the Stock Trader's Almanac, the middle of March has historically been a period where the stock market can experience a bit more volatility before the month settles out. Looking at market history going back to 1957, the S&P 500 has often shown different tendencies in the first half of March compared to the second half. Earlier research suggested the first half of the month tended to outperform the second half, but in more recent decades, the pattern has shifted somewhat, with markets often finding lows around the middle of the month and then recovering later in March. Looking even closer at the weekly data, the second and fourth weeks of March have tended to be stronger, while the third week has sometimes brought weakness. This year, the first 2 weeks of March have been negative, with the market declining during both periods. Historically, when that has happened, something interesting has often followed. In about 76% of similar instances since 1957, the market has gone on to produce positive returns during the final 2 weeks of the month, with an average rebound of a little over 1%. Of course, market history never guarantees what will happen next, but it can give us perspective. For investors, these kinds of seasonal tendencies can be interesting to observe, but they also serve as a reminder that markets rarely move in straight lines. There are always periods of uncertainty and volatility along the way, and that's where having a thoughtful investment plan becomes important. Because rather than reacting to every short-term movement, a clear long-term strategy can help investors stay focused on what really matters. Markets will always have their Ides of March moments. The key is making sure those moments don't derail the bigger picture. And if this conversation raises questions for you about how market volatility fits into your own financial plan, I'd be glad to spend a little time talking them through with you. You can learn more at george-wealthmanagement.com, or reach out using the contact information below. Thank you for listening.